Hey everyone, I want to talk about what I think might be a pretty low risk trade idea here in Agilent, where we'd be trading a breakout above this resistance. So this resistance here is about, let's call it 140, just to make a nice even number. I mean, a lot of times we talk about levels, but it's really more of a zone. If it's in within 50, 60 cents or whatever of a 140, that's been resistance. But you know what? I want to show you this ascending triangle pattern that occurred in oil. Ascending triangle patterns and descending triangle patterns, they tend to be pretty reliable. I don't really talk about a lot of patterns, but these guys are pretty reliable. Of course, they're not perfect, but it illustrates a dynamic that's bullish for the market. It shows that as time is going by, the sellers are okay with hanging out, in this case around 78.50 for oil. But as time is going by, the buyers are getting more aggressive. They're willing to pay higher prices. This is why the little valley or the bottom forms at a higher level than the prior valley. We call this we call this higher lows. Now, if we go and we look at Agilent, you can see kind of the same pattern is formed. Remember, when we look at these different charts, whether it's a stock or a commodity or a crypto or anything, a bond, we see these patterns that are similar on the different charts. That's because maybe the people that trade oil and the people that trade Agilent or the people that trade crypto are different people, but they all have the same emotions. Okay. When we look at a chart, what we're looking at is investor and trader emotions, at least if we're doing it the right way. A lot of people are into this like hocus pocus stuff like Elliott Wave and Gann theory. To me, I think that stuff is science fiction and I think it diminishes what we do here. And what we do is we look for supply imbalances, or I should say equilibrium imbalances, because when that happens, the market moves. All right. Now, 140, the sellers have been hanging out. But since about 2 weeks ago, 3 weeks ago, the buyers are getting more aggressive. They're willing to pay higher prices. So this ascending triangle pattern is an is illustrates bullish dynamics. Aggressive buyers can place in sellers. Regardless of the market, that sets the stage for a move higher. Now, the breakout means we trade above the resistance. And this isn't just a symbolic term that traders use. It shows us something about the supply and demand dynamics. We know there's a large group of sellers, traders and investors who want to sell at 140. Well, guess what? If the price trades above that, what does that mean? It means that those sellers have left the market. They're either cancel their orders or they finish their orders, but regardless, they're out of the way. So that sets the stage for a move higher because when the buyers come in, they're going to have a hard time finding sellers. They're going to need to bid premiums in order to attract the sellers off of the sidelines, and that is what's going to drive, or that could drive the price higher. Now, where would my trading target be here? And notice I said trading. This is not an investing thing. I don't even know what this company does, but I do know charts. You see how this resistance level is here? Resistance here, resistance here. There tends to be resistance at former resistance levels. You have people that bought up here who regret buying when the price falls. There's a lot of people who bought up here who are like, oh man, if this ever gets back to my price, I'm going to get out of here at break even. So if we get back up there, you're going to have remorseful buyers from here placing sell orders over here, and that could put a top on it. So remember, resistance is caused by remorseful buyers, people, at least after the resistance had formed. When the resistance first forms, we're kind of not sure why. At whatever that's the level that the sellers decided to come out of the woodwork. But when we get back to resistance and we hit it like we did here, that we know why there's resistance there now, and that's because you get these remorseful buyers from here placing sell orders. The same thing could happen here. So a resistance level is an illustration of supply, which is created in a lot of times by remorseful buyers. And the ascending triangle pattern is an illustration of aggressive buyers and sellers who are kind of chill. So that sets the stage for a move higher. So on the breakout, I jump in. My target would be up around 147. I guess my initial stop out would be if we get back below this 140 level. And basically, as long as it's above this trend line here, I would just stay in it. And if we cross the trend line, that could be a good trailing stop out strategy. You're not going to catch the top, but at least you're not going to lose your profits or all your profits. Okay, everybody, I hope this helps, and I will see you all soon. Thanks.